morning. The average car insurance premium could increase by £75 a year because of a government ruling that will change the formula for calculating personal injury compensation payments. Currently, courts take 2.5% from compensation awards to reflect the interest a victim will earn on the lump sum when they put it in the bank. But because the formula is based on the interest rate on government bonds, which has now turned negative in real terms, the discount rate is to be cut to minus 0.75%, meaning insurers will now pay out significantly more in lump sums. Well, the accountants at PwC have calculated this could mean young drivers see their annual premiums rise by up to £1,000, whereas older drivers could see theirs increase by £300. While the Association of British Insurers says the compensation bill facing the NHS could go up by £1 billion. The news of the ruling hammered the shares of the insurance companies, which say their profits will be hit massively. Direct Line closed down 7% after it said its pre-tax profits might be £230 million lower. And Admiral shares lost nearly 2.5% after it said it could lose as much as £175 million and that it was delaying publication of its annual results. Huw Evans is Director General of the Association of British Insurers, and joining us from Altrincham near Manchester is Neil Sugarman. He's President of the Association of Personal Injury Lawyers. Well, Neil, let me start with you. You campaigned for this change. How much of these extra payouts are going to go into the hands of personal injury lawyers as opposed to real victims?
None at all. This is all about injured people, and we're talking here specifically about very seriously injured people who've had life-changing injuries. The point about these claims is that they relate to people who will probably never work again and probably have to be cared for the rest of their lives, and that's why we welcome this announcement, because it's they who are going to benefit from the Lord Chancellor's decision.
So none of your members will be putting up their rates or anything like that after these more generous payouts start coming through the system?
Most certainly not. This is nothing to do with solicitors' fees. They're predetermined in any event. This is a totally separate topic.
Now, given that this discount rate is set in accordance with gilt yields, UK government bonds, the latter have been completely distorted by the Bank of England's asset purchase scheme. Isn't this a rather silly way to proceed?
It's about the fact that people who've been seriously injured tend to be very risk-averse. I've been in practice acting on behalf of seriously injured people for 35 years, so I'm pretty well placed to say that people do not want to take risks with their compensation when they know it's going to be very important to their care and they can't readily go out to obtain income to replace what they've lost. So that's what it's about, and I think we have to respect the fact that they are vulnerable people, and therefore they have to be very careful about what they do with the compensation when it's earned. And this is a reflection of that. It's a sensible reflection of that.
Well, Huw Evans, that is a fair point. I mean, this rate has been at the same level for 16 years. There was a real danger that some accident victims were going penniless. They were losing their payouts.
And we've never objected to the rate being reviewed, and indeed have supported calls for the formula to be revised to deliver a fairer rate. We've taken part in all the government consultations that it's had over many years on this subject. I agree with Neil, it's vital that these claimants get full and fair compensation, and it's very important that they have lots of options to do so. Of course, one of the things they can now do, which they didn't used to be able to do, is ask the insurer to manage the money for them through something called a periodic payment order, and that is a perfect option for a claimant who is worried they may not be able to manage the money properly, which has not been taken account of in the decision reached today.
Right. Now, of course, the government has just clamped down on whiplash claims, which account for something like half of all personal injury claims. I mean, the government's, in effect, taken with one hand, but they've given you back something with the other, haven't they?
Well, I wish the two were evenly balanced, but the impact of today's decision amounts to many billions of pounds impacts, not just for insurers, but as your introduction noted, for the NHS. That's money that could come out of frontline care, and for the Ministry of Defence. And the reason why this is a flawed decision is it's based on a formula that nobody actually uses. None of the claimants that Neil represents invest in index-linked gilts. If they did, they would be losing money hand over fist, which is why Neil would never advise them to invest in that. Surely it's time we have a formula that's based on how people actually invest in real life.
All right, Neil, what do you make of what you've just heard from Huw Evans?
I reiterate that people who've received personal injury compensation are cautious investors. They have to be. And what's been happening since 2001 is that they've been in a situation whereby, being cautious investors, their money has in some cases run out. What does that do? It puts them back having to rely on the National Health Service and local authority funding. Well, we all know the situation in relation to public service and the stretching of public services at the moment. So we say that the insurance industry has had plenty of time to prepare for what's going to happen. We think the approach is a sensible approach, and really, with proper and prudent planning, we probably wouldn't be hearing the sort of noises we're hearing from the insurance industry today.
Well, there's no reason for anyone's money to run out, because I said they can ask the insurers to invest that money for them, and that's something that should have been taken into account in Liz Truss's decision today. We all agree there should be a sensible formula, but it has to be one that is based on how people actually invest their money. And I come back to the point that we have to have a formula that reflects that and that helps people manage their money over the medium term and that compensates them adequately. There are perfectly reasonable ways of doing this without this decision which she's reached today. And to correct Neil, we've not had lots of warning about this. This was announced to the stock market on the 7th of December, less than 3 months ago. It's been done during the closed period when insurers are preparing for their results, thereby causing maximum chaos for the sector. And this after the Ministry of Justice has spent the last 5 years consulting on this issue without publishing the responses to any of their consultations. So I don't think anyone could argue this has been a well-handled process by the Ministry of Justice or one that has provided certainty to business.
Oh, Neil, this is a very important point, isn't it? I mean, all of business right now needs certainty and a stable policy-making environment, and the insurance sector certainly hasn't received that.
The Association of Personal Injury Lawyers has been calling on the Lord Chancellor for 6 years to do something about the discount rate. 2001. It's 2001 that the rate was last looked at. We say the insurers have had plenty of time to plan for this, but we mustn't lose focus. We're talking about people who are confined to wheelchairs. We're talking about people who've lost limbs. We're talking about people who've been severely injured, life-changing industries. And I'm sorry, that's where we should be focusing, not on big business.
We are focusing on those. We're actually the people, the industry, who actually pay out the claims that enable those people to live the rest of their life with dignity and properly cared for. So I don't think we need any lectures from the other side about how those people should be looked after and the importance of making sure that their payouts matter. That's exactly the debate we've been engaged in for the last 5 years. But equally, if we're going to perform that function and ensure for society as a whole that we have affordable premiums for motorists, particularly for young drivers who need affordable car insurance so that they can work, as well as for older drivers to keep them on the road as long as they wish to be on, then we have to have a balanced system based on a fair formula. And I struggle to see how the personal injury lawyers can defend a formula that none of them would actually advise their members to rely on.
What about Neil's point that the sector has, in effect, enjoyed some form of windfall gains during the last 16 years by the fact that this rate has gone unchanged for so long?
Well, the rate has gone unchanged for a long time, but that's been during a range of economic circumstances. I don't think many of our members have enjoyed quite the windfalls that Neil seems to imagine. But nonetheless, we have contributed throughout that time to a constructive debate about how this could be done differently. We're not people saying never, never, don't change a thing. We're saying let's have a formula that's fair, that's balanced, that takes account of the need to provide affordable insurance right across the economy, that provides a fair deal for claimants, and that critically is based on the way in which those claimants actually invest their money, not some made-up metric that is 20 years old and that doesn't occupy a place in the real world anymore. Of
course, lest we forget, we're about to get an increase in insurance premium tax from 10% to 12%. Mm-hmm. Is there an argument for saying that should be put on hold now whilst the system digests these changes?
Well, unfortunately, the government has put insurance premium tax up 3 times in the last 18 months, from 6% to 12%. That, together with the increasing cost of car repairs, as we're all driving more expensive cars with lots of electrics in them, and the increasing cost of whiplash, these things were already driving up motor premiums before Liz Truss's decision. So there's certainly a case for government to act urgently, and what we would like to see them do is reform the law urgently to produce the formula that I've argued for, done quickly and fairly so that we can have a sensible, balanced outcome for everyone.